In this video, I'm going to tell you the UK stocks that I've been buying right now, as well as been giving some commentary on stocks like Easyjet, National Grid, Boohoo, and a sneaky other one that you may not be expecting. And there's also the comment of the week this week, so let's jump straight into it. And if you like this video, please rate one of these to help beat the YouTube algorithm. So first things first, THG, or the Hut Group, the surprising stock here, has surged as the retailer has rejected the third takeover offer. Now, they recently rejected a takeover offer from Balerian Capital and King Street Capital Management a day earlier. However, THG said there was an unsolicited proposal of 170 pence per share, which is a 46% premium to Thursday's closing price, and rightly so. They said it significantly undervalued the company. After all, they were 80% higher 12 months ago, not saying they weren't already heavily overvalued due to their IPO or initial public offering, which was very favourable for them when they raised capital. However, I'm also not surprised given the stake that Matthew Moulding holds in the company, the CEO and I believe chairman. I don't know if that has been changed at all, but certainly was when I last looked. Now, this is a quality business in my opinion. Yes, it is pre-earnings. However, the revenue growth has been very consistent over the last few years, and it's likely to increase going on that trend, especially as beauty and nutrition are two things that are very key. They've also got the ingenuity, which I'm not going to talk about, but beauty and nutrition are very high margin products, and it very much seems that we're becoming very health conscious as a society, and therefore I've heard a lot of people going on about, well, I'm taking these pills, these boost my hormones, these do that, it's good for you, these give me all the vitamins I need, and quite frankly, I'm guilty of it myself. I've got like these cheap fake Barocca stuff, and it's on my desk, you can tell I definitely use them, and it's just something that really adds and tops up. It just feels that you're doing better and you've got your access to your nutrients. We've also got National Grid. Now, I thought this one would be a little bit controversial because they've seen their full year profits rise, and not just slightly, by quite a significant amount. Pre-tax profit has risen 107%. Their earnings per share has increased to 60.6 pence from 37 pence, which is a significant increase in their earnings here. And yes, they've likely seen a benefit from obviously what they say is a negativity, and that is cautioned over rising energy prices and the wider cost of living crisis. Now, I believe in the UK, all they do is maintain and regulate the national grid. I think they do have small reserves, but they don't make that much of a profit on it. And typically the Office of Gas and Electricity Markets, I believe, Ofgem, are very much nullifying the amount they could make. And this time last year, there was a lot of concern over how much money they could really make. However, they do also have a significant stake, I believe, in Northeastern America, I believe, and they do have quite a wide range there where I do believe they are doing more than just regulate the grid, and I think they are an energy provider over there, likely in seeing a boost in earnings as energy prices rise. I just thought this one was a little bit controversial. Of all of the energy companies, National Grid is likely one of the least impacting in terms of this. But it is interesting to see that as a lot of companies are struggling, your stocks like National Grid are doing very well. Formerly a very boring company, and still is a very boring company, seems to be doing quite well. It was a previous holding of mine, although I had sold it just because I didn't really like the investment and that I didn't understand it very well, which is why I likely didn't like it very much. We've also got Easyjets, and they've seen their quarter 3 bookings at 90% of beer bug levels. Now, this has been an interesting trend lately, and it's something I've noticed myself, and it seems like the airports are seeing a lot more footfall and a lot more traffic. Bookings going forward are a lot more promising. I think recently IAG, or International Consolidated Airlines Group, which is like the owner of British Airways and another brand in Spain, I'm pretty sure actually that they had seen or they ordered 50 more Boeing planes, which I thought was quite a bold position considering how much they were struggling during the pandemic. But now to see that they're pushing out and they're saying, well, actually, our bookings have now risen to this amount and they're doing quite well, it's very interesting to me. I think, yes, we've been stuck in the countries, we've been domestically locked down for quite a while. And I mean, even still so, you've still got to have a certain amount of passport or whatever. And I don't mean the passport that proves your identity, I mean the passport of vaccinations. And you still need that to travel. And I imagine people are getting a little bit anxious. They want to go out and see the world, as after all, there has been a lot of lockdowns and people, quite frankly, don't want to live in flats or small houses anymore, or at least, be trapped in the same 4 walls because they're not savages like myself and these 4 walls here. Regardless, I got a little bit off topic here, but they had mentioned they'd reported a pre-tax loss of £557 million, which is only slightly less than £645 million a year earlier. although their revenue has apparently surged to £1.5 billion from £240 million, although that is to be expected in my opinion, as obviously there were likely lockdowns or very much travel restrictions which impacted them greatly. Therefore, their revenue is obviously going to increase exponentially or a very high amount from that point. But the fact that their bookings has risen 6% above 2019 levels in the past 10 weeks is something to keep in note. And I think travel is only going to boost up for now. I think it's going to see the boost that the pandemic-related companies such as the e-commerce stocks initially saw, and I think they're going to have a jolt. However, I don't think this is sustainable, and once this reaches a certain level, it's likely going to plateau off, and I have a feeling a lot of people are going to jump into these airlines, in my unprofessional opinion. I think a lot of people are going to go, well, actually, they're doing quite well. I'm going to jump in there, I'm going to put all my money in this airline, and then they're going to do quite well for a bit, and they'll likely begin to taper off or become overvalued and drop down. But what do I know? I'm only guessing and speculating, but it would be very interesting to see if this one comes true. The comment of the week is by Nick, and Nick has to be one of my biggest fans on the channels, but I do appreciate that Nick is sticking around and always providing another opinion that usually differs from my own. Think YouTube income is your goal as investing isn't your thing. Okay, fair enough. I'm not actually running this YouTube channel for an income. I've now realized, although initially I was running the YouTube channel for an income, I realized that during this time that realistically it's not about the money you make from YouTube, but it's about the people that you can meet. After all, your network is your net worth, and the people I have met from this have given me significant opportunities where I have now put myself in a better position than when I was or before I'd created this channel. So therefore, YouTube is only really a goal to build brand awareness or give connections that allow to have meaningful relationships with people that I'm able to benefit from financially or other ways. I'm talking financially as that is the purpose of the channel. He also asked, why do you think Boohoo is a good company? Now, I've spoken about that tons of times before. However, I was reading Boohoo's annual report, as you would expect or hope me to do. There are 4 things I quite like. And they talk about the outlook. They go, heading into the new financial year, the group is planning the business on the basis that these external factors will continue for the year ahead. I think it may continue for longer. However, if I was in Boohoo's position, I think I'd be doing very much the same thing. And this is the fact that they are targeting increased sourcing from near-shore markets, meaning that they're able to have less supply chain restrictions and delays. This allows them to be more competitive as they'll have fiercer delivery times, or they'll be able to import the goods at a quicker pace, therefore being able to create these new products and therefore, at least in the UK, be able to deliver them at a much faster pace. And this allows them really to be quite agile, not fragile. Again, they're also looking at stock management and returns. They're saying that they're going to operate with lower levels of inventory through tighter stock management and increased levels of open to buy, giving greater flexibility to react in changes of demand mid-season. I like this, and I also like that they think that the return rates are going to remain around current levels during the next year. And so quite frankly, I think that's going to continue going on. I think the returns rates are always going to be this high going forward, and that's quite a bearish view in my opinion. Cost management. Now, I mentioned this in my Boohoo stock update. I said that if you look at the accounts and you see their results, in fact, this would be a massive bonus if this is exactly what I'm after next to me. Consolidated flow, financial income. Yes, so we can see here that actually they had made a loss or a profit after tax of about negative 4 million. So they've lost £4 million. However, when we look actually at their gross profit, or at least their operating costs relating to that, since 2020 it has nearly doubled. However, if they're able to cost cut and reduce their operating costs by, say, a random figure, £100 million, and I think it's possible, although very ambitious, where you're just saving 10% here and there, they would easily become more as profitable as they were before. I'm not saying this isn't challenging. However, the fact that they are operating and commencing a cost efficiency program by scaling recent acquisitions that have already received significant investment means that they are able to therefore cut these costs. They're not going to have duplicate warehouses doing the same things anymore. And I think going forward, their operating cost is going to taper and lower per the revenue. So the operating cost as a percentage to the revenue, I think, will decrease over the next few years, and it may become a lot more favorable and much more advantageous. It very much seems that in this recent account that they very much made it look a lot more negative to get that hit out of the way and continue on. And they've also said focusing key resources and capital investment into projects to support strategic growth, which is onboarding new wholesale partnerships, upgrading the technology platforms, and going live with their automation in the UK, which they're going with Sheffield. And I think there's also Daventry that they've built recently. I don't know if that was automated, but it's likely there one of their goals in the future. And they're also going to be building their US distribution center, which I think is good. Investing in long-term capacity where they've got the capabilities or the capacity to build sales over time. And they're really investing 5-10 years ahead, and they're not investing in short-term profits by leasing an extra warehouse or two so that they can therefore shift more stock. I like this. It's a long-term outlook, and I do believe Boohoo will do well, and it really depends on their demand in the UK. However, interestingly, we have seen, and I can't say his name, but one of the Khamenei family, I believe the brother of Mahmoud Khamenei, I believe it's Rabia, apologies if I'm wrong, has actually reduced his stake, or her stake, I'm not sure on the name, if I'm honest. I'm just going to say one of the Khameneis has reduced their stake from about 4.98% to basically 4%. Reduced their stake by about 100 basis points, which is quite a large move in my opinion. And certainly a little bit more of a threat if there is a potential takeover, as now they have less power to reject this offer. However, an insider can sell for many reasons, but they only buy for one, and they only buy to make money. Now, this insider could have decided to sell just to raise some capital. Cost of living's increased, they need a bit of cash on the side, hence why they got the rest of their stake. It might have been for any reason, but the fact that they are still holding 4% of the company is more of a positive sign. And yes, it's negative overall. It's a bit weird that you would sell at a price such as this. It might suggest that they don't think things will go up. However, I don't think it's worth looking too deep into, because quite frankly, they can sell for virtually any reason. It could even be covering tax liabilities. Now, I'm also going to reveal my SIP holdings, because I've not shown my self-invested personal pension in a while. I've made a few acquisitions. So this is Freetrade's web app, and it's now in the beta. It's a bit annoying to log into, but you can see my ISA here, and you can see actually this is exactly what I hold, and that I'm not lying about it, for example. This is my investments. It's all here. You can see the total number of shares I have, which should replicate that of my spreadsheet, which is available on Patreon. So if you want to track my holdings live, you can go to Patreon and see this. However, we can see in my SIP here that I've actually been buying a few shares of Dunelm Group. You might go, well, the value of this is nothing. It's only worth £1,142. Why does this matter? Well, this is because I'm incorporating a slightly different investment strategy, and I think it is of interest. Yes, I've seen quite significant drops in some of my stocks and minimal claim or gains in some of my other stocks, but it's a long-term portfolio. I don't really think I'm going to be putting much capital into this portfolio, so therefore I'm chipping into dividend stocks, good, consistent dividend payers, and I'm going to hope and pray, I guess, over the longer term that this cash flow builds slightly, and I might get £10 a month when I'm retired, which would be quite nice indeed. And I think going back here to my actual portfolio, so you can see my performance, I'm down 44%. I recently, or even today as of recording this, failed my compulsory basic training on a bike, a motorcycle, right? I've got a lot of negatives ahead of me, and right now this 44% decline could be a brick wall. I could see this wall and I could go, you know what? No, I'm going to stop here. But quite frankly, just because I'm down 44%, it does not mean I'm going to quit, because what do I gain from that? I will keep pushing forward until I find the strategy that is right for me. Quite frankly, at the moment, I'm confident in my own ability, which may be mistaken, because I feel that through the reading that I've done and the research that I've done of some of the greatest investors, that there is a strategy here in mimicking what they do and really taking advantage of the knowledge that they share. Therefore, I'm going to keep pushing. The wheelbarrow is sat there on the hill. You guys have a choice. You can push the wheelbarrow, or you can forget about it, do your own thing. But ultimately, that wheelbarrow is not going to push itself. And if you imagine at the top of that hill is exactly where you want to be and all of those goals, that wheelbarrow, sorry, hair just fell in my mouth, needs pushing. So quite frankly, yes, I'm down 44%. Yes, I failed my CBT. I'm not giving up. I'm going to do my CBT again in 2 weeks. I'm going to keep doing it until I succeed. They sell me, oh, you could use a scooter, an automatic scooter. No, I will keep pushing, and quite frankly, I feel that is exactly what you should be doing as a person. Right now, you might be sat there going, well, you know what, I've been sat on my phone on TikTok, or I've been scrolling through Facebook, whatever. Wake up. I don't say this because I'm trying to be better than you, because quite frankly, I'm likely not. However, if you're able to open your eyes a little bit more and go, you know what, actually, what have I pushed for last? I'm a bit comfortable, I'm a bit complacent. Now actually is a good time to be pushing that wheelbarrow and getting something done. Now maybe following this video you might go, you know what, I'm going to research that stock I'm really interested in, or you know what, I'm going to go to the gym. And hopefully you do. Have a fantastic day.